remember to register on that. Even as we are changing governments as of tomorrow, I know this one was meant to be about the Big Four agenda, but now I think things will also change even as we continue. But please go to whitebox.co.ke. I'm putting the link on the chat. So that everybody can access it who hasn't accessed it. Again, that's where government supports, nurtures, and nurtures your idea, innovation, product, or solution. The usual, how it works, just go into it, tell them who you are, do the evaluation, development and growth, scale and transformation, and then you just apply. After that, what you expect from them is access to their facilities, technical assistance, financial support, access to markets, linkage to investors, and incubation and acceleration of your product. So please note, there's a difference between incubation and acceleration. Incubation is for the products that are mostly at idea stage. For acceleration, it's to actually make sure that you scale. So for people who have projects that have started or not, this is the place to be. Please consider to join them. I think, as all of you noted, today we have Amadou Sissoko, and he'll be guiding us through today's session. I'll also have the privilege of hosting him and all of you guys. Today, I think for all of you, we shall be hosting, today's session is a peer-to-peer session discussing about fundraising landscape in Kenya. And even further than that, I would like Amadou also to spread it out and say also about the fundraising landscape generally in the world and globally, because as I was telling you last time, I am not here just to make sure you learn about Kenya. I'm also here to make sure you learn about opportunities outside Kenya, because that's what matters, even as we continue building our nation. So without further ado, I'll go and introduce Amadou. And then Amadou, I'll just get into the Q&A with you one-on-one, so that you can continue mentioning a bit stuff. Amadou, according to me and many other people, is undoubtedly one of the most inspirational and visionary innovators of his generation.
Recording in progress.
Visionary of his generation. Amadou Chiko Sissoko's ultimate life goal is to positively inspire and impact the lives of more than 1 billion people globally. So he's not playing small, and now's a good time to actually take advantage of that. As a founder of Empreneur, he's on a mission to empower 1 billion of Africa's most daring and mission-driven entrepreneurs to build globally dominant and competitive enterprises that will create jobs, grow GDP, and make Africa and Africans undisputed leaders of the global economy. With more than 15 years of experience pioneering innovation ventures across the African continent, Amadou is the founder of Guinea's first agro-touristic retreat called the Bataba. Amadou, you correct me if I said it wrong. Co-founder of Fabric Farming Ecole, which is Guinea's first agribusiness school and rural innovation center. Also an alumni of the inaugural cohort of the prestigious Mandela Washington Yali Fellowship Award, recognized as one of the most promising young African leaders by the former US President Barack Obama. So guys, I'm giving you a session to know and to meet somebody who's actually met Barack Obama. If you've never met him, at least you can meet him through Amadou. He's also a two-time TEDx speaker, published author, and high-performance leadership coach. Amadou was and still is the only African to have led the design-driven entrepreneurship program for 2 of the 4 Yali leadership centers in Nairobi and Accra, coaching and training more than 10,000 of the most promising young business leaders across 23 countries in East, Central, and West Africa. So guys, without further ado, I introduce you to Amadou Chiko Sissoko. Please give me the reactions, guys. I want to see them. Thank you for the love hearts, for the claps. Thank you, guys. I appreciate this so much. And this is Amadou to you. And as all of you know, from here henceforth, my video goes off because you guys they keep reminding me I'm not the most important person today. That's okay. The VVIP is definitely Amadou Chiko Sissoko. And without further ado, I go into that. Amadou, thank you so much for joining us this evening.
It's my pleasure to be here, Waiga. Thank you again for having me, the entire White Box team. everyone who has put this program together. Thank you all for having me, and hello to everyone who's participating. I see we have many entrepreneurs here today. Whenever we talk of funding, entrepreneurs show up because that's what we always think about. Always thinking about funding. So today I'd like to challenge that thinking a little bit. I'd like to first think through the processes through which it's easier to raise money, and then from there have conversation with you to answer some of the questions that you may have in your fundraising journey, in your business building journey. So like Wega said, my name is Amadou Chiko Sissoko. I'm originally from Guinea. I'm currently in Kenya, where I came to pursue a vision that I had many years ago, which was to innovate my country. And at the time, before that vision, I was just a young entrepreneur like every other young entrepreneur. I started my first business when I was in high school, a movie shop. That failed, learned a lot of lessons there. Went on, studied medicine for a year, got a scholarship to go study medicine. I dropped out of school, out of med school, because that was not what I wanted to do. Traveled across Europe with a dream of publishing a book that also ended up being a failure. Found myself in the street in Paris, came back to Guinea, tried different ventures again, didn't work out. So the same story, it's trying until something works. And so the thing that did work was the agritourism retreat. That was really an opening to see that indeed, you can be considered a failure by everybody. My grandmother said that because I dropped out of 3 universities, she said the only degree I got was failure. So I went to the University of Failure. And the good thing is, in the University of Failure, if you actually learn the lessons, you will understand that failure is part of the process, right? That whichever destination you're headed in life, you're going to fail along the way. And it's good as long as you're learning from every lesson. Every failure gives you a lesson so that you don't make the same mistakes again. And so when I look at my journey as an entrepreneur, I've had the chance of building a business that has been good and worked out, became something of value. I've had the chance of building businesses that never went anywhere. I've had the chance of being a part of businesses that have been successful. I've been a part of businesses that have not been successful. I have been able to raise capital from grants. I've raised investment capital, and I've also sold a company. And so, and now I'm building another one for which, I found another type of business model for, solving the financial issues. So the talk today, when we think about the financing landscape, which is really changing, it's changed a lot, but there are some fundamentals that are still the same. And so I just want to, take you to 3 main ideas that I always have, that I've been applying, mindsets that I've been applying over the years, that I think it's important for every entrepreneur to know. So the first is to understand that investment is a means of getting a financial return, right? A financial or social or some there is always a return, but mostly financial when we talk about business. Now, some people invest because they want to get a social return. They feel like they've made money, they want to give back to society. Some of your uncles, your parents who believe in you will invest in you because they believe in you. Not necessarily that you're going to bring them something back, but because they believe in you and believe that you will be able to succeed with their help. But when an entrepreneur thinks about funding, you have to understand that funding is fuel to grow your business, or funding is the requirement to start your business, or funding is the need to expand your business. So funding is, just like technology, an enabler for an outcome. It's not the outcome itself. It's a huge mistake for an entrepreneur to focus all of your energies on just raising one amount of money and then not having a plan, a strategy, a team, and all these other things that are necessary for that funding to yield a return. And so as you're thinking about funding, you always have to think about how you're going to make that money back. How is that money going to come back to the people who invested in you, or you yourself who have sold your car, like I've done before, to invest in a business, where now the business needs to pay you back, right? So the mechanisms of the business and its ability to pay back the money that went in, or to generate that revenue from the money that comes in, or to be able to acquire new customers from the money that comes in, or to push it to the next funding round if you're in a startup which is in technology and you're seeking for venture capital. I believe that's the most important part than the funding itself. Because the funding itself is a byproduct of you doing those things right. If you have a very good business, they always say this in sales, that a very good deal always attracts capital, right? If, for example, let's say you want to buy a phone, and you go to the market and you realize that someone is selling an iPhone 12. Let's say the cost of the iPhone 12, 13 is maybe $1,500, and the person says, "I'll sell it to you for $1,200." And the phone is in good condition. It's new. They just want a smaller margin than their customers on the roadside. If you have the money and that's what you're looking for, you're going to pay that price because you will feel like I'm getting more than what I'm paying for. Investment is the same way. Whenever an investor comes across a good deal, they want to invest because, one, they were looking for that type of deal. Two, the price of the deal is very attractive and the entrepreneur has a great plan, a great team, a great concept, a great product, traction, etc., etc. But if the deal is not good, even if you want to invest, but if the cost of the deal is too high and the risks are too high, you may pass on that deal. So an entrepreneur who's maybe greedy or who doesn't really understand their business, even though it's a good business, an entrepreneur who has literally no traction, so the risk of you investing in them and then being actually able to achieve that goal of giving you a return is a hard sell, the investment will not go through. Or maybe you don't want to work with the person. You love the business, but the person is the wrong person because they're not coachable, they're not open-minded. Different things like that can lead to the deal going wrong. So one, you have to have a good deal, right? So that means that your business itself needs to be investable. Someone can invest in it and get a return. And that's not just based on your own assumptions, because entrepreneurs, we like to be very optimistic about, the short term, and we don't understand that investors invest for the long term. Investors are looking at your business for the long term. Will your business survive the next 5, 10 years for us to get our money back? Because every investor that you'll meet, either they're investing their own money or they're getting money from someone else that they're investing, and then they're supposed to get a return on that money. Take their share, give the share first to the investors who gave them, the limited partners, if it's in the case of a venture capital, and then the managing directors get their share, and then now you get your share, right? So when they're investing in you, you also should always be thinking about how you're going to bring that money back, even before you start raising money. Second, you have to understand that business is about relationships. Money is a relationship game. It's always about relationships. So if you already as an entrepreneur have a network within which there are people who invest, there are people who have money, there are people who are in the field of investments or in the field of finance, they will know what you're doing even before you raise money, because you reach out to them for advice, you ask them for insights, you get some wisdom, mentorship from them. You build a relationship with people who fund, people who are invested in businesses, people who have money before you start raising money. So it's like a guy who meets a girl for the first time and then asks her to marry him. Right? Like, we meet for the first time. I don't know you. You don't know me. You're a woman. You come, "Hey, Amadou, you're so amazing. I've seen all your work online. Would you marry me?" Right? Or maybe you're a lady, right? Your name is Maria. You meet a guy named Tom. He says, "Oh, Maria, you're the most beautiful woman I've ever met. Like, gosh, my heart is melting for you. Can you marry me? Will you marry me?" Most likely, if she's sane, she'll say no. Why? Because she doesn't know you. She doesn't trust you. She doesn't know if you're a maniac, someone who's paranoid, you're bipolar, if you're a criminal. She doesn't know you. And it's the same when it comes to money, right? Unless someone has had an introduction to you prior, that's why a lot of investors prefer for warm introductions where they're introduced to you by someone that they already know, then just you meeting them randomly in an event and starting to pitch them your business, expecting for them to just buy into it, right? If you meet an investor in an event, most likely they're there scouting, but they're not actively ready to write a check, because there's a whole process to what it takes to invest in a company. Now, there are fools out there. We all have fools in our families and in our communities that will just give you money for the sake of giving you money. And most of the time, I say, if you're going to get money from a fool, sign a contract just for your own sake. Because if you take money from someone who doesn't know why they're giving you the money, they don't know, what they're expecting to get from that money that they're giving you. If something goes wrong, which most of the time things will, either it'll take you a bit longer to pay them back, or the business will not take off for a good time. They're going to be a serious issue on your back, because when they come back, because there were no terms that were established, because you had nothing written in paper, they can say they gave you more than what you asked for. Right? They can say they also spend a lot of time in it. They could say they want that money converted into equity at whatever rate they want, because nothing is written down on paper. So it's always good if you're getting money from someone who randomly decides to give it to you, or doesn't care about what you do with the money. You have a contract with them in terms of the term sheet could be convertible note. You lend me money now. When I raise capital for my business, I convert it into equity. Or you could say, just write me a loan, I'll pay you back with interest, you agree on the interest rate. Now, let's get back to building relationships with investors. How do you build relationships with investors? Go to events, go to meetings, go to meetups. When you come to a platform like this, where they talk about investments, and there's what are they called? There are investors that are online. Sometimes you can even send them messages on Zoom. But just introducing yourself. Go do some research on them on LinkedIn, find out what they're doing, find a common link between the two of you. Then do what? Send them an email, or no, send them a note telling them, oh wow, I love the work you're doing with this company. I like this, I like that. I'd like us to stay in touch just to learn from what you're doing, and and it will give me more knowledge on how I can build my company. You want to create a relationship of interest where they see you as someone smart enough, entrepreneurial enough, daring enough for them to want to build a relationship with you. Because immediately they want to build a relationship with you, that's the beginning of everything. Where you build those ties slowly, always thinking about the long term. Also, find out in your family, in your society, like who's the wealthiest individual there, right? Go ask them, like, I'd like one day to be like you. Don't ever say, I'd like to be more than you. I think that's a huge mistake. As a young person, I've done it before. And I've realized, like, no one wants to hear, especially competitive, ambitious individuals, no one want to hear how they're going to help you become better than them. So you better just say, I admire you, I want to be like you, I love the way you're working. Can you teach me how I can better manage my finances? Can you teach me about money? Can you teach me about entrepreneurship? Can you tell me how you did that, right? And persist, because wealthy people are very busy. The wealthier you become, the less time you have for things that don't bring you more wealth. The less time you have for things that don't preserve your wealth. The less time you have for things that do not take you forward. So you're not looking for new friends. Because all of them come for your money. At some point, they'll just be asking you for money. It just becomes the habit. You want to have those relationships because those are the people who can advise you on how to structure deals. Those are the people who can advise you on how to raise capital. Those are the people who can advise you on the trends that are happening in the economy, because they're operating at such a level that once you get that insight, it will propel you forward. So the mindset of an entrepreneur who builds ventures for success is one where they're not looking for money when they need it. They build relationships prior to when they need money, and then they focus on building a business that can automatically attract capital, right? A business that by its own nature attracts capital. So you have to start thinking also like the investors, right? When an investor is raising capital, they create something called an investor's deck. The same way you create a pitch deck to go pitch to an investor, the investor creates their pitch deck to go pitch to their investors. And when they get to their investors, they tell them, this is our funding philosophy, or this is the philosophy of our fund, this is our thesis, this is our investment thesis. We believe that young women who are in university studying STEM are underfunded, and that they have a lot of potential, and we believe that we can identify amongst them the best entrepreneurs who are going to build the greatest gender-based products, in the world or in this particular market. And then they take the market of women products or businesses that are defined for women, they take that market as their market size, right? So they also have to describe how big their market is of the market that they're going after, and also the market of entrepreneurs that they're going after, right? Because their customers are entrepreneurs in this case. And then they say, we want to fund them between this amount to this amount. So if it's early stage, we could say from $10,000 to $500,000 or $100,000 or $1 million, and then for 10 years, right? So the fund is for 10 years. They're funding these entrepreneurs for between 10K to 100K or 500K in these particular fields of health tech, consumer goods, e-commerce, arts and crafts, and or fashion, for example, or fintech. And then they also specify the geography. If it's in Kenya, if it's in the counties, or if it's in East Africa, or if it's in Africa, right? Or Southeast Asia. So the investor who has that thesis, you will find that information on their website, right? Or they will have spoken about it somewhere. They'll always say, we are looking for entrepreneurs like this, right? So the third thing for you is to define who is your investor. Of all the investors out there, who are the ones who are funding within the industry, the stage, the geography, and the amount that you're looking for and where you're operating in? So if you are a health tech company and you go to pitch to someone who's looking for fintechs, most likely, even if you have a good business, they will not have the mandate to be able to fund you. It's not within their purview, right? They're focused on health techs. So don't talk to them if you don't have a health tech. Talk to them about health techs that you know. Get information about them on how is fintech working in health tech. Try to understand the space they're in. Build that relationship, because you never know. Once they'll see you moving forward and you're making progress, they may be the ones also, someone can come to them and say, hey, by the way, I'm looking for a fintech that is like this. And because they know you, like, oh yeah, there's an entrepreneur I know, let me introduce you to them. Why? Because I know them. We already have a relationship. I understand their business. I understand their business model. I understand their character. One of the things that really changed my thinking a long time ago was when I was introduced to a mentor who actually was a South African investor. He was a Jewish guy from South Africa who was working in it was B2B software, right? They had done an e-commerce before. I think they sold it. Then he started becoming an angel investor. And so when I met him, he told me from the first meeting, he said, send me your social media handles. I'd like to understand how you think. And I never forgot that, because I realized that when you meet someone who everyone is just meeting them for asking for money, they have to be able to differentiate very, very quickly between the people who are serious and the people who are not. And so when they go to your social media pages, what they're trying to understand is, how do you think as an individual? Right? One, are you consistent with what you're telling them and the type of business you're building? So if you're building a business, again, in health tech, and all you're posting about is politics, it's very hard for someone to get to understand you online. They'll be thinking, well, this is a politician or an aspiring politician or someone who's just passionate about politics, but there's nothing that they're talking about in relation to the field that they're operating in. While great entrepreneurs are obsessed about the field or the work that they're doing, to the point that they want to tell everybody about it, right? They want to write about it. They want to talk about it. They want to publish about it. They want to tell people how smart they want people to know how much they know about that field, right? So that also matters in your fundraising process, because people are going to do research on you. They're going to do some background research if necessary, if the amounts are very large, on your team, on your mentors, on your advisors. They're going to try to understand, what got you into this business. Is this just a one-hit wonder where you're looking to make a big hit and then move on? Or are you committed to this project, this initiative, this business for the long term? And again, I say long term because investments are for the long term. There's no such thing as a short-term investment, right? Every investment, for it to yield results, always has to be looked at in the long term. So you have to think long term. You have to have a brand that is long term and consistent with the business for which you're raising funds. And you have to understand the environment. So the last thing is about communication, right? Being able to tell your story, being able to communicate your business in a very clear, articulate manner. Now, this doesn't mean you need to be a 5-time TEDx speaker. You need to be, some guru in terms of presentations. That you need to be, like Oprah Winfrey or I don't know, Caroline Motoko. No, that's not what it means. It means that your thought process needs to be clear. Clarity of thought. So even if you're soft-spoken, you're an introvert, you need to be able to write out exactly what your business does, exactly who you are, exactly what are the roles of the different individuals in your team, exactly what the market looks like, in a very clear way, in a way that a child can understand. Because everybody values people who can break down complex things into simple concepts, right? Take something that is very complex, that is very difficult for people to understand, and then you simplify it, like you make it extremely simple for people to follow. Everybody loves that, right? So if everybody loves that, that's how you should communicate, because it's much easier for people to understand. So if you cannot communicate your business properly, if you cannot be able to to sell your business in images, in video, in audio, in all the senses, then it's going to be extremely hard for you to raise capital. I know guys who have taken a flawed business model, right? Like literally a flawed business model. It was incomplete, but because they knew how to communicate, created enough interest in the investors for them to work with them, to want to help them get it right. And one of those companies is called Twiga, right? The founder of Twiga, when he was pitching here in Nairobi in 2015 at the 1776 conference at IHUB at the time, he had tuk-tuks with which they were getting bananas from Meru. They would bring them to Nairobi. They had these little tuk-tuks through which they were distributing to the mamambogas, right? But he was not able to communicate it very clearly. However, the business was interesting for those guys who were doing the competition, and the guy was an American. So they loved the fact that an American who was doing his PhD has come to hustle here in Kenya, get involved with tuk-tuks and distributing and mamambogas and all that. Oh, he's on the ground, he's living here, he really looks the part. They said, wow, yeah, let's take this guy with us. So even though he didn't win the competition here in Nairobi, he ended up winning the competition there in the US. Because they now help them, define a bigger market, say, okay, we're thinking like Amazon for food in Africa. We need to think about large infrastructure distribution, etc. Until now, they went to where they are today, right? So yes, that can happen, but I think those are outliers, right? And if you take, let's say, 1 million entrepreneurs, only 100 are outliers. And so the good thing is, if you're here today, then you're an outlier, because for me, my purpose is to only work with outliers. So everywhere I'm invited to speak, every opportunity I have to speak, by God's grace, I'm only speaking to outliers. So most likely, if you set yourself on achieving a big goal, building a big business, and then you can work your way upwards, most likely that will happen to you as well, where you'll create enough interest where someone will be willing to walk with you. However, after that, they had to find someone else who could sell the story. They had to find other people who were speaking about it. They had to find other people who were selling it. But he played the initial role in getting the things done, and then his team with him now, pushed the thing. So you have to realize, if you want to really overcome a lot of those hurdles, you have to be able to communicate clearly, with clarity, with concision, with compelling stories, right? The story of yourself. What got you into this business? What got you into this industry? What are the challenges that you were facing personally that are related to the solution that you've created? What are the problems of the industry? What are the problems of the customer? What's the story of the customer? Describe the customer in detail. When we sold our business, our luxury event business in 2019, one of the things that we were very good at, it was articulating the story of the business. In the slides, if you just, and even till now, most of the businesses I built, when I send out a pitch deck to someone, they get that, like there's no explanation needed. Everything is there. They understand it. They even tell me things about, you know, the business that I hadn't thought about, because I make it very, very clear, concise for them to understand. For those also who I offer the same services of, you know, pitch deck design, it's the same thing I tell them. When you want to raise, because you don't know in which condition that person is going to read your slides or your presentation if you're not there. You don't know if it's, you know, early in the morning, late in the evening, if it's the first pitch deck they look at, or if it's the 100th that they look at. So you want to make sure even in 4 slides that you've already answered all the questions, right? You've created enough interest for them to want to, you know, partner with you. So public speaking, if you're not very good, find a coach that can help you. Find someone who can coach you so that you can be better. Pitch design, pitch deck, that's also extremely important to be able to, in 4 or 5 slides maximum, be able to tell the story of your business and just, you know, get the deal going, get the conversation going. Never expect for fundraising to be like I said, it's like a woman coming to me and telling me she wants me to marry her. I don't know her. It's not happening. And if the same thing happened to you, you'd think the same. So if someone just shows up to you the first time and tells you to fund their business, would you do it? If your answer is no, then you better think the same way also about, you know, the person that you're going to interact with. So it's always good to be extremely prepared. Now, lastly, before we go into Q&A, which I think will be the best session, and prepare your questions, kindly send them in the chat box, so that we can be able to see them, and then those of you who open your mic as well. The last thing is, and we can then segue from Kenya to Africa. The funding landscape in Kenya is much more attractive than many other countries across the world. I can say that, because for me, myself, to come to Kenya, it's because I saw Kenya becoming the hub of innovation for the continent. The Kibaki regime had Vision 2030, which I think is the best vision and the only vision that any government in Kenya should pursue up to the point where it's achieved, because it was inclusive, brought a lot of people together, got a lot of ideas, and designed a plan. And it may not be a perfect plan, but it's a good enough plan to drive the country forward. It was a good enough plan to attract a lot of talent like myself to come to Kenya, to buy into that vision. And then all the other funders who are coming today because of everything that's been happening in the ecosystem since then. So hubs like iHub, you know, that grew, struggled, but got acquired. You know, the founders went on to start their own businesses. They've shown people that it's possible. Companies like Cellulent that came, grew, you know, now probably one day will go public. You know, those things are happening. But also, the good thing is it's a diversified economy. In my country, our economy is 80% reliant on mining, right? We have large mines of gold, of copper, diamonds, things like we're the largest. We have the largest deposit reserves of bauxite, which is the raw material for aluminum. So most of our economy is concentrated in mining and government, you know, regulated. And then you have agriculture, which the productivity is not as high as it could be, while the natural potential is great. But in Kenya, you have tourism, which is a big industry, a big contributor to the GDP. You have financial services. You have large banks in Kenya that are going to other countries to open up branches. You have distribution companies that are distributing products all over the country, retail like Naivas, like Tuskys, like Carrefour, international brands that have come in who have made their name here, like LC Waikiki. You have, you know, malls all over Nairobi. You have more malls in Nairobi than maybe many other cities put together on the continent, which malls and lifestyle and, you know, this luxury lifestyle attracts talent that says, well, if I can live in Nairobi where it's cheaper, right, than living in Los Angeles, I'd rather live in Nairobi, because everything I want in Paris, in London, I can have in Nairobi, right? So it attracts a lot of talent. It's a hub for innovation for the continent. So that in itself makes it easier for a good entrepreneur in Nairobi to not only find the networks for financing, but also get funded. Okay, and if you look at the numbers today, Kenya is one of the leading destinations in terms of venture capital funding in the past few years. And I believe it's going to continue leading the way in the future as more and more startups from other countries start coming to Kenya. And that is just the government, changing the immigration policies to make it easier for younger entrepreneurs to come to the country. Because right now, one of the biggest limitations is if you're an entrepreneur who wants to come and set up a business in Kenya, you have to have $100,000 in cash that you deposit in a local bank account to prove that you can invest to get an investment license. And that's hard for someone to come and build a startup. But if they reduce that to $10,000 or $20,000 and say, okay, if you want to build a startup in Nairobi, this is how much you need in order for you would have many startups who would relocate from Lagos, who would relocate from TZ, who would relocate from even Asia, from Hong Kong or Singapore, who would say, yeah, I'll come and build a business in Nairobi. And the good thing about that is all these startups, the teams that they employ are going to be a part of the upside if and when they succeed. So just like we've all heard of the PayPal mafia, I call the iHub mafia. Which other company? There's the the Paystack mafia recently. So I believe that in order for wealth to be created in the ecosystem, we need more successful entrepreneurs, right? Because if you're working in a startup that becomes successful, you become successful with it. Now that also implies that the founders have to share, the equity with their teams, which in Kenya is a bit. I think you understand what I'm saying there, right? That also is a problem. But I think moving with time, people will realize that their value, and they'll stop joining companies simply for just a pay, right? They will also want the equity. I think that time will come when people will be more keen on getting a share of a company that they join as an early founder, early employee, than just a pay raise, because a lot of people are just thinking short term. So now, I think that gives you like an overview in terms of what is happening. It's in other parts of Africa. I'm telling you, it's extremely hard to get even 10K, right? Like I remember in Guinea. My first investors were from the US. I couldn't, raise initially money locally because no one believed in what I was building. No one understood what I was building. I had one of the wealthiest industrialists in the country tell me one day that he would never invest in something like that. But someone else from somewhere else, came, visited, liked it. Then they, told their family, their friend, their brother, and they invested, which allowed me to, kickstart the journey. So it's to tell you that you can succeed here. You will succeed here, but you have to have a strategy for your success here. You can't just put it to chance. You can't also say it's just hard work. It's also smart work. It's strategy. It's thinking 10 steps ahead, having the right team. And when I say the right team, is the team that can actually build what you're trying to achieve. If the team you have cannot do the work they're trying to do, and you need money to find that team, you're in trouble. Right? So you better spend a lot of time building the right team, starting with the little resources you have, build something of yourself, for yourself, by yourself, and then make sure that that thing can make money. It can make money in the future, or it can make money in the short term. So that, I think, are some tips. And yeah, I'm happy to answer your questions. I have a book called Start Within to Start Winning. It's a leadership book, an entrepreneurship book. It explains and helps entrepreneurs overcome whatever hurdles you're facing so that you can be able to achieve your goals. I wrote it because I trained so many of these high performing leaders, and they were all stuck. There's always a stage where they get stuck. So how do you get them unstuck? You're a leader, you're a thought leader, or you're a hard worker, and you're always, every time you get somewhere, you're stuck. So how do you break through that and have these tools? So I created them because the whole fundraising journey, or the whole journey of the entrepreneur, is in your mind. And so unless you're able to build your mind and build yourself from within, it's going to be literally impossible to win without. So Start Within to Start Winning. Great book. I would advise all of you to get a copy. We sell it here in Nairobi for $12.50, and inclusive of delivery in the city, and also outside. So we deliver also across the country. But yeah, tell me what you want to know, and then I'll help you find an answer. It was a pleasure doing this session with you all, and looking forward to support this entrepreneurial program as well moving forward.
Good stuff, guys. Let's get into it. Thank you so much for the questions. I appreciate all the questions coming in. So I'll just get into that. But before that, as usual, now that it's halftime, roughly give or take, let's do the poll. Just placing the poll for all of you, just to get into it. Tafadhali, please just do the poll so that we can actually get to see what's going on and how you guys are feeling it. It's already launched. Kindly get into it. And even as I go into the poll, so for those who are doing the poll, please continue doing it. Tafadhali, I'm really waiting to see some responses. I hope all of you can see the poll. That's good. Good. I like the numbers. Let me go into the questions. Benson, I see you had raised your hand. Do you still want to ask a question? I've allowed you to speak, so please speak. You have the opportunity to. Benson Kamau? Okay, going once. Benson Kamau, I can see your hand, but you're not speaking. I've already given you permissions to speak. I'm asking you to unmute. Thank you, guys. I can see the poll is climbing up fast. That's good. Good stuff. Good stuff. We're already at 70 out of 134. Okay, Benson, are you speaking?
All right, now I'm accessed now.
Okay, good. Continue.
All
Make your questions.
All right, thank you very much.
Short and sweet.
Yes, yes, thank you so much, Chiku Amadou. Very good insight. My question is, I have been involved in fundraising for social ventures, and I realized that most of the Africans don't understand what they really want to fund in. Probably they want to fund something that it will give money back instantly. But now, when you come to looking for investors here in Africa, it's really hard to understand what they want. Do we prioritize entrepreneurship in terms